Hey everyone, Dan here. We are well after market close on Friday, July 16th. Today we're going to take a look at Clover Health. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own ideas, opinions. They are not trading advice. They are not investment advice. Do your own due diligence. Accumulate all of the ideas that you can collect across the vastness of the internet and come up with your own trading style, trading plan, and make your own decisions. Okay, so Clover Health today, a pretty low volume day compared to the 3-month average, nearing 60 million. Yet today we clocked in just a little over 17. So a relatively boring day, to be honest, and slightly red. So slightly red day on relatively low volume. But let's unpack this a little bit more. Now you'll see the chart that I have here basically is fixed with some price targets that I had put out in my CLOV price targets video, I think earlier this week. Basically I have to the downside a 708 zone here, which is obviously rapidly approaching, it feels like, even though that would be a pretty catastrophic percentage drop from this point. But that to me is potentially a really good dip buy zone, unless there is some crazy catastrophic news that comes out about CLOV. And obviously to the upside, I have this 1325, 1661, and 1788 accumulating some upside price targets that I have different time frames for. If you want to watch that price targets video, you can, let me think, I'll put it in the description below. How about that? I'll do that for you. Okay, so a couple of things to note here. Obviously, we're coming down to this 100% retracement level from this big push up here, and pushing past this sort of previous price floor. Let me just stick this in here. So if you know anything about the videos that I typically do, I look for these really strong supply and demand zones based on previous resistance or support aligning with recent resistance or support. And so as you see, a bunch of support here that had been flipped after some resistance, and now in the current days you see it catching support there before falling through and now treating it as resistance at that 861 level. So if it can flip that 861, it has an opportunity to make a run back toward that 1215 range, in my opinion. But if it gets stuck under there, then I think we are staring down the barrel of 761, which would then obviously open the door for 708 if it can't hold. But again, that to me, I would obviously do an updated analysis and video of it as it approaches that point, because you never know if there's crazy catalysts that are involved, if there's some macro forces that are, impinging upon individual stocks. But, barring anything like that, that to me does look like a really solid buy zone, especially given that would bring us down $1.20-ish more, I guess closer to $1.10 more. And right now, CLOV's market cap is just a little over $3 billion. So that to me would be a really interesting price zone to look at. On the indicator side of things, before we flip over and take a look at the data, my indicators are all wonky. I wanted to pull up the MAs, and I wanted to pull up the RSI and the MACD. So let's get to those. I'm giving you a brief Weeble tutorial here, I guess, that I didn't expect to be giving. But okay, so let's get rid of these two for now. And let's take a look at the MAs. So the MAs, as you would imagine, fully in bearish formation at the moment. The 20 made an attempt at the 50 there, but now has been increasing the real estate between them. So we're going to need that to sort of stabilize. And right now, that 20 is acting as additional resistance level right around, nearing that same level at 861. The MA is at 839. So this just sort of like compiles the sort of areas in which CLOV is going to hit resistance as it tries to make any move up, and then also then diminishes the support zones to the downside because it doesn't have the MAs as potential support zones to the downside. So we crossed over here into a fully bearish formation just on July 1st. So just also keep that in mind. This hasn't been stuck in this downtrend for a super long time. And much of that obviously driven by this crazy run-up that we saw here, and sort of like how that threw all of the MAs askew from, their previous formation, which was bearish. Now on the RSI side of things, as you can imagine, really toward the oversold end of things. Now what I'm going to be looking for to see if it can really build strength is what I look for in most stocks, and this looks like it holds true for CLOV as well. But the 50, the midline on the RSI, is actually very, very important in my opinion. So you see here, you see this gray area is the midline. Now you saw it dipped several times into oversold here, and then it tried to make a run up, but it couldn't establish support. If you want to think of it like, candlesticks or like charting on the actual like price charting area, it couldn't establish support over that mid-range, and so it very quickly curled back down and sort of made a downward movements on the RSI, indicating that it couldn't hold the midline after having spent several periods of time in oversold territory. So that, to me, indicates that it's going to spend more time in oversold territory. Similarly, if we see here, it's spending a bunch of time in overbought territory, and then it came down and it was able to hold the midline. So it dropped down to 47 there, but then shot right back up and was overbought again, and then came down to that entire midline range, like all of these areas here in the 50s. So it was holding it, and then what did that do? It shot it back up to overbought, came down, held in the 50s, 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 and then what did that do? It shot it back up. Now it came down here, and it tried to hold the 50s, 54, down to 49, and then it came back, tried to hold the 50s again, and then just kept getting shoved down, and then that's when you saw the sell-off just continue, and then it came up briefly, but then couldn't hold that either, dropped the midline again, made another run up, dropped the midline again, and then we've been stuck and oversold ever since that time. So I would pay strong attention to the RSI as the price action potentially tries to reverse trend, and can it establish over the midline, and if so, once it curls back down, say it even comes up to overbought, as it comes back down, is able to hold that midline. If so, strong possibility that it's going to make another run up into overbought, obviously then carrying the price action along with it. Now, on the MACD, basically consolidating the last several days, having come from sort of well below the baseline here, and then coming up toward the baseline, but still sitting pretty significantly underneath, but just not able to get any bearish or bullish momentum going, just sort of like snooze fests of a day, of days, I should say. And but definitely has plenty of run room to the upside if it can get some green action going. And I think that both the RSI that I just talked about, if it can establish up into overbought territory and then hold the midline and go back into overbought again. Same thing with the MACD here. It has a lot of run room to the upside. And so if it can establish over that 861, I think that that's indicative of it having a lot of run room toward that 1215 if it wants. Now it's gonna encounter some sticky zones in there. I think that this sort of area of the chart gives us enough to go off of. It's going to hit some tightness right around here at like 925. Let me just put these on the future dates so we can have these here if we want to look at them. So this like little zone is going to be a challenge for it potentially, and then if it can get up and over that, I would look for some tightness, some strong resistance here just over 10. Now, if we can get up over 10, then we probably have pretty smooth sailing up over 11. So we have some nice like percentage gains sort of on the horizon if it can get the momentum going. Okay, so those are sort of like the the in-between supply and demand zone areas that I would look for where people would be compelled to potentially sell based on the previous price action. Now that said, once it flips those to support, it should be pretty strong supports, where then it would get bought up if it comes back down to it, and then push it up to the next zone. So just think not just from a dollar value, but from a percentage gain point. It's sitting in the low 8s right now. This is a good push. Basically, a dollar upward would be the resistance zone after it gets that 861 support. A dollar from its current price point. And then the next zone pushes it up over 10, and then the next zone pushes it up over 11. So a bunch of nice potential gains in the future if it can get that going. Now, again, if not, so I'll be looking for it to catch support at that 761. But I think if it really gets to that 761, there's, and it would have every indication of heading to that 708 sooner than later. And that, to me, like I said, would be a really interesting buy zone that I would take a look at that time. Depending on what sort of catalysts were in play. Now the order flow, you just see a bunch of large-scale orders just hemorrhaging. Large-scale outflow the last 3 days. No large orders coming in today. And the medium keeping pace with the medium inflow, keeping pace with the outflow, and small orders, coming in stronger on the inflow. That's presumably the retail traders and the interest that we've seen there, playing a factor. But that's what I look for on the charting side of things. Now, on the data side of things, this is Ortex. Obviously, the short interest, CLOV here, I'm sure you're well aware, one of the most heavily shorted stocks. This was reported. Probably this is the end of June estimates from the indices. So NASDAQ short interest 27.8% of the free floats, and now we see Ortex is estimating 27.56. So short's definitely keeping pace, continuing to sort of like flex up and down as time goes on. The utilization is getting very, very high. So a week ago, 100% of the shares available to lend at lending institutions were taken, and that certainly leaves short sellers with no available shares to borrow and short sell into the market. That said, the extent to which that incentivizes those folks or those broker-dealers, whomever it may be, to sell phantom shares into the markets to continue to try to execute on short positions is always in question. And we'll look at the failed to deliver data in a minute to try to look for symptoms of naked short selling. That said, it is down a little over 13% from a week ago, but still very, very high. Very hard to borrow shares of CLOV to short sell, but they are clearly not backing down, not really going anywhere, even though they're covering relatively quickly, just 0.78 days to cover. So, definitely a bunch of short sellers jumping in and out rapidly from their positions. Now, on that failed to deliver data that we're talking about, so we just got yesterday the failed to deliver data from the second half of June. Now, failed to deliver, if you're not familiar, it means that, say you bought 100 shares of CLOV. That appears to you in your brokerage as though you have 100 shares of CLOV, but what's actually happening in the background is whoever sold you those 100 shares should have delivered them to your broker within 2 settlement days, 2 trading days, and then you actually have the shares that they delivered. When they fail to deliver those, they don't send your broker those shares. That's called a failed to deliver. And essentially, you don't see anything different in your brokerage. It looks to you as though you have the shares there, but what you actually have is an IOU, meaning that the person who sold them to you should be delivering that share within the next 30 days. And your broker, of course, will take care of it in the background. But the problem is that IOU can then sit there and appear as though it is part of the overall shares offered in CLOV, can then outpace can sort of like represent an outsized supply of shares available in CLOV or shares wanting to be sold in the CLOV. So these are shares that were failed to deliver. Now, these are cumulative, okay? This isn't saying 5.6 million shares were failed to deliver on June 28th. This is saying however many shares were failed to deliver minus however many were delivered. So the net delivery on 6/28 plus any outstanding shares that have not yet been reconciled prior to 6/28 accumulate to this 5.6 million that you see here. So you see a bunch of reconciliation happening here toward the end of June, but these are still very, very high numbers for CLOV to have fails to deliver. And you can see this here on the SEC site itself. These are the fails to deliver for CLOV. You see this huge spike up here, June 27th, 5.6, and you see it falling back down as there were some that were delivered, but you see there's nothing prior on the charts here. This is January 7th, 2021. So the entire year so far, nothing has even remotely resembled this fail to deliver that we saw on June 27th, and that's after the price skyrocketed on June 8th. So there's always the question of these strategic fails to deliver, whereby somebody sells you shares around 22 bucks, they don't deliver it, the price, then maybe they short the stock, the price plummets, maybe they buy shares for 11 bucks. Remember, they had sold you shares 22 bucks, and then they actually deliver you the share by this dates, but it's an $11 share that they purchased. It wasn't the share that it is still the share, but do you see how they benefit from strategically failing to deliver? Driving the stock price down by shorting it, potentially, maybe, I don't know, and then gathering those shares that you thought you bought at a much lower price, in this instance about half, and delivering you that share. So more to unpack there as time goes on, but this is definitely an anomaly. And even then, when a bunch were delivered and reconciliation the following days occurred, this was still much higher than all of the previous data except for one day for the entire year leading up to this. So something to keep in mind, something is a whack in my opinion. So insider activity for CLOV, not really much to speak of here. There's shares bought here and nothing coming out, but that to me, there's nothing there that's really playing that big of a factor that I would really pin as being that interesting. Now the institutional ownership is 105.16%. This is a symptom oftentimes of repetitive short selling in a stock. So when the short interest is very high, what can happen is if institution A loans shares to institution B to short sell, institution B then short sells those to institution C. Okay, so ownership is claimed by A, who lent the shares, and C, who bought the shares. And so that's how you get institutional ownership over 100%. Now keep in mind, this isn't really 105% ownership of all of the shares in the sense of retail owns some, insiders own some. So tack that on to that percentage and you're well over 105%. So this is just the out of wackedness of institutional ownership puts the shares out there over 100%. Again, add to that retail and insiders, and you'll be even further out of whack. But we'll unpack more of these in the days ahead. That will do it for this video on CLOV. I hope you enjoyed it. I appreciate you watching, and I hope you have a good weekend. I will see you in the next video.